Southwest Airlines looking to avoid a repeat of last year's turbulent holiday travel season. CEO Bob Jordan joins us on the set to discuss his outlook. Our own Phill LeBeau is here, too. Hey, Bob, it's great that you're here.
Jim,
and I do want to ask you immediately. I know that you're getting people on jetways who learn how to de-ice. You've got people more dispersed because you had so many people in certain cities that were locked in. If we have a storm again, like Elliot, are you ready?
We are ready. We've invested in trucks and new pads and staffing and technology. I'm very, very proud of our people. We are ready for winter. We've already had snow, big snow in Denver, Chicago, and we performed extraordinarily well. Over Thanksgiving, as an example, Thanksgiving Day, there was snow, 97% on time, 0 cancels across our entire system.
Now, it's interesting because at one point you say we give the customer what they want, and you talk about your terrific Affinity system, and I think that's great. But isn't that what you just said? Isn't that what they really want? They want on time, because that's how Southwest is.
You know, above all, they want to get to where they're going. So if you think about, I'm really proud of our team this year. We got a new order with Boeing. We got all of our jets flying. We're staffed. And I'm just really proud of all the accomplishments. And we are taking a lot of momentum into 2024. But it's all about operating a great airline, improving our efficiency, and improving significantly our returns on invested capital.
Right, one last question we give to Phill. You talked about some really interesting travel patterns post-pandemic. Talk to me about Tuesdays and Wednesdays.
You know, our travel demand is really strong right now, leisure and managed business. But the business is just not restored to pre-pandemic levels. It's getting better quarter to quarter to quarter. And I'm actually really proud of our Southwest business team because they are winning market share. They've actually picked up 3 points of share in one single year. But the patterns are different. And it's really because the business travel that typically would have been there on a Tuesday and a Wednesday is just not restored. So our schedules before, if you looked at a Monday to a Tuesday, that was about a 1 or 2 point difference. Now, with a new schedule in first quarter 24, it's 8 to 9 points different. So you're just, at the end of the day, you want to match your schedule to the demand.
Bob, a big part of your scheduling in the first quarter, you guys took a lot of criticism in the industry for how much capacity you added in the third and the fourth quarter. You've pared it back considerably for the first quarter. Are you pretty confident that you've got the right balance starting in the first quarter and then as you move into the year? Obviously, things can change, but do you feel like you have the balance in place?
I do. It's hard to know because the travel patterns are very different. And we have optimized our 2024 schedules and changed the network significantly. And it's not just taking out capacity, but it's changing where the flying is. And as we continue to see change, we will continue to modify the network. But next year, again, is all about optimizing the network and driving efficiency.
We've seen a real change in the industry in terms of airfares in the last year. And I know you can't predict what airfares are going to be 6 weeks from now, let alone 6 months from now. But generally speaking, pricing for the industry, do you expect it to stay roughly where it is right now? What's your, if you had somebody said, what do you expect for the industry for 24?
Well, you know, at Southwest Airlines, we're proud. We're the pricing
I know what you're going to say,
low cost, low fares. But if you go back to pre-pandemic and you look at fares today, they're about 8% higher from 2019. So if you ran just normal annual increases forward, their fares of today are well below where they would have been but for the pandemic. You know, as you think about it, you've got a lot of airlines taking capacity out, moderating. There's probably some room to move on pricing, but we are completely focused on driving efficiency and, again, getting our returns above our cost of capital.
And paying down your debt. And I know that's a big part of it. And look, Jim and I have talked about this. You guys, and I say you guys, the airline stocks, you are the unloved children right now because of your debt levels. And whether that's fair or not, that's the perception that is out there. Does that change this year? Do you think that perhaps there's a little bit less of, I don't think these guys can pay down their debt, to, okay, they're making the moves that are needed to be made?
Well, we've always been known for financial discipline, a very strong balance sheet. We're the only airline that exited the pandemic with cash over debt. We have about $12.7 billion in liquidity compared to $8 billion in debt. So we do have future debt towers that come in 2025 and beyond.
Yep.
So we're holding a little bit of cash in excess for that. But no, we have a very, very strong financial position, very strong balance sheet.
It's about one of the continual themes in everything that I read about you is margin improvement, margin expansion. Some of that could come from ad spending. For instance, I know you had spent on letter X, which I found quizzical because that means you're in with a scrum. You're a high, and there's a lot of things that are said on Twitter that, to me, would be unbecoming to your customers. It's time to just pull the plug entirely, or where are you on that?
You know, we constantly evaluate all channels because you want your ad spending to be not only the most effective in terms of the channel that you use, but how you spend your advertising, whether that's social, mass media, and we also want to be the places that our customers are because you handle your customers through those channels as well. But no, we'll continue to take a look at that.
Now, at the same time, I have to tell you, this Affinity program sounds great, but I want people to know what Rapid Rewards really means because you mentioned it 100 times at the conference call. What do I get? I mean, I get points that I actually use. That was an odd thing. I thought we all use our points. We are very proud of our Rapid Rewards program. It is growing faster than the airline. It has for a very, very long time now. We are gathering record numbers of customers every quarter, record engagement, record spend on our card. And where you see other airlines leaning away from their customers, we are leaning towards them. So you got points that never expire. You now have same-day standby. You have tier status that is actually easier to earn, not harder to earn. We made it easier to earn, so we're actually leaning to our customers. But no, I'm very proud of our program. It is award-winning, and it's the best in the industry. All right, we're going to leave the last to Phill.
Well, basically, yeah, I know you're going to be cutting back on your CapEx long term. You guys announced that yesterday. The max cadence in terms of deliveries, how comfortable are you with where it is, where it's headed in 24 and 25, 26?
Yeah, we have a wonderful, cost-effective new agreement with Boeing that takes us out to 2031. Yep. And we have a lot of flexibility in that agreement. We did moderate our 2025 and beyond capacity from mid-single digits to low to mid. That really allows us to manage our CapEx, which obviously allows us to manage free cash flow and hit our return sooner. The MAX 8 is a wonderful aircraft. I'm very optimistic. It's really Boeing, but I'm very optimistic that we'll see the MAX 7 certification sooner rather than later. And we need that aircraft, and it's a wonderful aircraft.
I want to thank Bob for coming on the set and Phill for visiting us because I've been negative on the stock, as you know, but I've changed that stance. It's just too good an opportunity, even though your price.
We appreciate it.